Hello, everyone, and welcome to another Wednesdays with Wendy, where we make small business ownership successful or less stressful, one step at a time, even if we mince our words. If you are seeing this video, would you please hit the like button? If you're on Facebook, if you're on YouTube, click the little thumbs up deal. It helps me know if anyone is out there watching. And, if you feel so inclined, drop a comment. Let me know where you're watching from and what your business is. That would be wonderful. All right. This week, we are continuing our series on how to know what your QuickBooks is telling you. You're going to learn what the most important report in QuickBooks is. And that is going to help you run your business better and also get information to your tax preparer and any potential lenders that you might have. All right, let's get right to it. Try to make these things a little shorter than the last few weeks. Again, we're going to go with this sample company that is in QuickBooks. And I'm going to share the screen. Okay, there we go. Good old Craig's Design and Landscaping Services. Okay, so we are, let's see. I'm totally spacing on this now. This is great. Now that people are watching live, it makes me nervous. I forgot to tell you, if you're just tuning in for the first time, my name is Wendy Kane. I am the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace at tax time and throughout the rest of the year. All right, now let's get to this. So here you are in QuickBooks. Let's go back. When you first log in, it's going to take you to the dashboard, and it has all these widgets here. If you want to look at them, you can. If your QuickBooks is up to date, then these widgets will be correct. If it's not, don't freak out over the widgets, because if you haven't gotten your QuickBooks up to date, all these numbers don't mean anything. All right, so you're used to seeing the transactions screen. That's where you go and, enter the transactions. Let's say you've done that already. What you want to do is go to the Reports tab, and under Standard Reports, they've got several reports that are already done for you. The most important report that you can run for your business is the Profit and Loss Report. Sometimes it's called an income statement. This is a report that's going to show you how much income you had, how many expenses you had, and then the most important information, whether you made a profit or a loss. Okay, so you can run now. Your QuickBooks may be different. QuickBooks is trying to do these. They've changed the view of the reports. So this is called their modern view. I personally still like the classic view, but I'm afraid they're going to phase that out. So I should probably just keep it in modern view for now. But anyway, okay. So what you want to make sure is that that the report period that you're looking at. So this just defaulted to this year to date. So you can see today's June 18th, January 1st to June 18th. What I do a lot for when I'm doing my monthly clients bookkeeping, I look at last month because we're pretty much on a monthly basis. So you can always do that. And of course, they've now got all these, you can compare, you can filter. Most of you aren't going to use that information. You're either going to need last month or last quarter. Right now, we're still in second quarter. So the last quarter is first quarter, which is January, February, and March. And then the one that you really are going to need the most of, they don't have any information in here. Remember, this is a sample company, is last year, because your tax preparer is going to want that information. All right, well, I guess we'll go on this year to date, like it had, where did it go? There it is. Just to see if, okay, just to have some numbers to work with here. Because, like I said, remember, this is a sample company. I don't do this bookkeeping. Okay, so here are three things I want you to make sure you have not done when you run this report. So, in the transactions bank feed, you've entered everything. In the income section, here are some things to look out for. So, income is your sales or your services or how much you've sold. So, income is money people have paid you. What you want to watch out for is that you don't accidentally put in loan proceeds or owner contributions. If you got a loan from the bank, and let's say it was for $100,000. So when the bank feed, $100,000 comes through, that entry doesn't go to sales. You didn't sell $100,000 worth of stuff or services or whatever. That was the bank loaning you money. That's got to go to a liability account on the balance sheet. And we can talk about that one of these other days. But make sure it does not go in income, because if your tax preparer doesn't realize there was a loan, you could end up paying tax on $100,000 that you didn't earn. Now, who wants to do that? I don't. I don't want to pay tax on, I barely want to pay tax on the money I did earn, much less money I didn't earn. So that is a huge thing to look out for. The second is very similar. Owner contributions. Now, I realize a lot of you you're more taking money out of the business than putting money in. I got that. But if the business, the checking account gets low and you're like, oh gosh, I got to make payroll, I got to pay some bills, I got to make these loan payments, and you take some money from your personal account and put it in the business, that also goes on the balance sheet. It does not go on the profit and loss report because, again, you don't want to be taxed as income on money that you put into the business. You can put money into the business and it is not a taxable event. So that goes on a different report. If you accidentally put it in sales or something like that, you could potentially get taxed on that if your tax preparer, or you, if you're doing your own taxes, if you don't realize that that is what you've done. So again, we're all for paying taxes, excuse me, taxes on all the money we have legitimately earned, but no more. We're not going to pay tax on loan proceeds or owner contributions. So make sure those don't go to the profit and loss income section. I am so sorry. Um, okay. The third thing I want you to make sure you don't do is down here in the expense section. The expenses are pretty straightforward. For the most part, and this is where a lot of people who are doing their own bookkeeping, they think, okay, I know what rent is, I know what utilities are, I know what accounting fees are, I know repairs, I know meals and entertainment. I've got this. Yes, yes, this is definitely the easier section to get correct. What you want to make sure is that you don't end up duplicating expenses. Sometimes things will come through the bank twice. I've got one bank with QuickBooks that is sending things over twice. It's maddening. I don't know if it's a bank problem or a QuickBooks problem, and it drives me nuts, and I don't know how to fix it. And I have tried some things, and it's still not fixed. And that's a whole other discussion for another day. If you are doing bill pay through QuickBooks, and using, over here with the expenses, bills, bill payments, that is where a lot of things can get duplicated. If you put in a bill in QuickBooks, that expense, that amount automatically goes on the profit and loss report down here in one of these expense categories. Then when that bill clears the bank, when the payment clears the bank and comes through the bank feed, if you don't match it up and just also put it to expense, let's say it's your rent, it's going to get put in there twice. And then you're going to be deducting double the expenses, which may make you think, well, this is cool. Look, I don't owe much tax. until you get audited and they realize that all the expenses were duplicated. And then you're going to be in a heap of trouble because you're going to have to go and redo the tax return and pay tax on that amount that you accidentally deducted when you shouldn't have. So those are the three main things to look at on this, to watch out for on the profit and loss report. Let me go over real quick what it tells you. So it does, if you look at this and you keep your QuickBooks up to date and you avoid those three things I mentioned, it gives you a wealth of information. It tells you how much you've made in each, how much you've earned in each service you provide or product you sell. You know, if you've got it set up right, it does. And that can help you, and you can run this. I don't know. Let me see if I can. I don't know if that'll work. Like I said, no, there's nothing in there. But you can run the report for the previous period. You can calculate dollar change, percent change. You can run all the nerdy number stuff you want. And it can give you a lot of insight into which products or services are selling the best, which ones are the most popular. You can look at it by months. I don't know how to do that. And like I said, this new view here, I'll switch to classic view real quick. This year to date by months. You hit run. And then see, it tells you each month, how much did you make? What were your expenses? And then it can tell you if you made a profit each month. This is the year-to-date amount. That can give you a lot of information. You can see if your business is kind of seasonal, you know, and help you know, oh yeah, we're during these few months of the year, boy, we are making bank. So we better save some money back because look, during these other months, you know, we're doing all right, but not so great. Or we need to come up with another product or service to offer during the off months when, you know, our main seller isn't selling as well. So anyway, there are, of course, a bunch of other things we can look at. They're called KPIs, key performance indicators. And you can go through, there's ratios, there's a lot of nerdy stuff that probably 99% of you watching this video have no desire to do that. But you can if you're so inclined. So, all right, let me stop sharing. Okay. That is it for today. The most important report you can ever run in your business is the profit and loss report. The tax preparer is going to need that for all of last year, January through December. Your bank is going to want last year's plus the latest quarter or two, depending on what time of year it is you're applying for the loan. So if you run no other report in your business, please run this report at least monthly and get some idea of how your business is doing. This will help you avoid surprises at tax time, either because you won't see that you've got a huge profit and you didn't know about it, or you know, it'll help you run your business better. Because if you see you're losing money every month, you probably need to make some changes because you know we don't want to have a huge profit that we pay a lot of tax on, but you don't want to lose money and go out of business because that's not fun for anybody. All right, that is it for today. Remember, no one is born knowing how to do this, and it is not taught in school. If you are feeling lost and overwhelmed, you are not alone, and that's why I'm here to help you. Go to my website. If this doesn't sound like any fun to you, go to my website and book a call, and let's see if I can help you get started, if I can help you maybe even do it for you, and then it will be off your plate and off your mind. All right, y'all have a good day.